In this video, I'll give you some insights, some smart money insights on Rule 603, synchronization profits. This is a very, very powerful rule. And when you learn it, there's no doubt that you will become consistently profitable. Stay tuned, it's going to be a lot of fun. Hi everyone, I'm Ken from Crypto Trading KS and the inventor of the CTKS method, the world's most powerful smart money buy and sell level detection system. If you're new, a very warm welcome and welcome back CTKS family. You're here to enhance your smart money edge, to know where the algorithms are buying and selling so you can profit like smart money. I'm grateful to be sharing this time together. If you find the content helpful, don't forget, smash that like button and please subscribe to become part of our global family. Let's run the numbers. In the past trading session in the US or main markets, we saw that gold had an absolutely parabolic run. Yields and the DXY weakened. The main markets, the stock market, the Nasdaq and the S&P 500 also had a bit of fun as fear left the market, and also junk bonds enhanced their price appreciation, which means people are feeling more risk-on behavior. A major issue driving the markets either forward or backwards is the Fed, and especially its policy on interest rates, especially upcoming increases to the federal funds rate. We saw core PCE or personal consumption expenditure price index month on month come in as the consensus estimate. This is a key data point that the Fed looks at when deciding to increase or decrease the federal funds rate. Personal spending was a little bit higher at 0.5% above consensus 0.4%. But personal income was lower, 0.3% versus a consensus 0.5%. It means that inflation is moderating. It also means people are spending slightly more but getting slightly less. One of the best ways to understand which direction the main markets will head is to look at total crypto market capitalization. It's very important not to analyze this with recent indicative price, but to analyze it with the CTKS method, which reveals market structure. So let's put on the indicator and see what is actually happening right now. We can see total crypto market cap has been rejected several times from this $1.153 trillion mark. What does this actually mean? It means that risk-on behavior is starting to come back into the market. With better than forecast GDP, the prospect that the Fed will stop increasing interest rates, but that is only a prospect at the moment. That means risk-on assets are trying to stage a breakthrough of this very, very important structural line. A very warm welcome to anybody that's new on the channel. One of the things, the reason that you look at total crypto market capitalization is a lot like the reason that you look at junk bonds. And you might say, Ken, I don't look at either. Junk bonds also gives you an idea if risk is coming in or out of the market. So why does that matter? If risk is coming into the market, people feel really optimistic for higher prices. If risk is coming out of the market, they feel that prices will fall. A lot of people simply don't look at these two charts, total and junk bonds, and they make a huge mistake. You can't become financially independent if you don't know the way the markets work. Tier 1 charts of the engine of financial markets on a global basis. Understanding these charts is incredibly important, but you want to understand the chart from a structural point of view, not recent indicative price. When we look at junk bonds, we can see a level of support through here. At that 92.40 mark, that's quite important, but there's a much stronger level of smart money structural support at 92.24. When we look at the main markets, if the markets lose interest, if people are coming out of the markets, it's reflected in junk bonds. It's also reflected in total crypto market capitalization. You can look at these two charts like the canary in the coal mine. And what does canary in the coal mine mean? In the old days, before they had sensing devices, they used to take canaries in a cage into the coal mine. Why would they do that? They did so because if there were toxic gases, the canaries would die first and then the miners would run the heck out of there. But don't worry, they had devices to resuscitate those canaries. They were very kind to their canaries. If you're liking the content so far, please smash that like button and don't forget to subscribe and ring that notification icon so you don't miss a thing. And if you're new to the community, a very warm welcome, and you might just like to say hi in the comments so we can welcome you. Every chart will tell you a story, and the chart of junk bonds, what is it telling you? It's coming into support. It's got a minor support here, but this is quite a strong one. This is structural support through the CTKS structural method or objective dynamic market structure. This is not recent indicative price. The two are incredibly different from each other. Recent indicative price goes like this. Oh, there's a level of resistance here. When I get over that, and I've been looking at this for what? Oh, I don't know, 24 hours? That must be the most important line for junk bonds. That's a surefire way to burn your account. You need to look at market structure. A potential different way to look at it, if you go to a movie and there's a cast in there, of course there's a cast, it's a movie, but the concept is every single cast member has a part to play. They have a role. These are canaries. If junk bonds comes down, it will find support and in all likelihood bounce, but it could also go up from here. The first resistance it will encounter is around that 92.69. The top one is around that 92-95 mark. There's more potential for junk bonds to go up than down at the moment, but we frequently see prices moving in a wave. You must be aware of this, because if price moves down to find support before it moves up, don't let it phase you out of the market. What is total crypto market capitalization telling you? It's telling you that it's tried to break above this particular smart money structural sell level. Structural sell levels are very different from recent indicative price levels. They're a world apart. The concept is we're seeing upward price momentum. That is very good, but we must pass across these two lines in order to see follow-through behavior with the crypto market, and we would expect follow-through behavior with the stock market as well. It's very important that you get a process to apply to and understand how financial markets are working, and looking at sentiment is a really good way to do that. We can see stock sentiment, crypto sentiment, bond and debt sentiment. They're all positive at the present time. What does this actually mean? It means the markets have upward bias and upward momentum. But don't get confused. Even if you have upward momentum, you can still get these pullbacks. A lot of people think that anytime you get a pullback, the party is over. The party isn't over. You're just getting a bit of a break. Price is always moving in a wave, so when price comes down, as a professional, we lean into market action. But of course, we know what we're doing because we understand the structure of the market. Looking through the top 8 cryptos, we can see Bitcoin had that push up and then push back, and it's just consolidating at the current time. We'll look into that structure in a minute. What we're doing here is we want to understand that no alt can escape Bitcoin's gravity. If Bitcoin goes up, what's going to happen to Ethereum? It's going to come up. If Bitcoin goes down, what's going to happen to Ethereum? It's going to come down as well. What you will find with the alts, there's a thing called directional correlation. And when you understand directional correlation, you understand how vitally important it is to understand Bitcoin's gravity. Just like total, just like junk bonds are the canary in the market, Bitcoin is a little bit different. Bitcoin is like the Pied Piper. The Pied Piper was a story about a guy who played the flute, and his name, funnily enough, was the Pied Piper. He just loved pies, but what happened whenever he played this flute? All the kids followed him. Ken, that's not the story. The Pied Piper of Hamelin. In 1284, the town of Hamelin was suffering from a rat infestation, and the Pied Piper, what does pied mean? It just means multicolored clothing. He played his little Pied Piper flute, and all the rats followed him. They were hypnotized. But I like the children's story better. It's more fun. So what you can just do is think of Bitcoin as the Pied Piper for the alts. If Bitcoin plays that flute and says, hey guys, we're going up, and of course, gals, we're going up. Yep, that's what they do. They go up. If they go down, Bitcoin goes down. What happens to the alts? The alts come down as well. Some underextend and some overextend. This is what's called Bitcoin's gravitational field. We can assess the power of Bitcoin's gravitational pull by 24-hour liquidations, and we can see they're currently 26.14 million. More shorts have been liquidated than longs. That's the reason for the upward price momentum. In the last hour, we've seen WorldCoin get whacked with long liquidations. That means the price has been coming down. When we look at comp, for example, KNC, Maker, Conflux, STMX, and a range of others, we can see a lot of short liquidations. That's the meaning of positive price momentum. When we look at the EDX exchange, which is an institutional on-ramp into crypto, they focus on 4: Bitcoin, Ethereum, Litecoin, and Bitcoin Cash. And Litecoin is coming up to its halving. Because of this, it's important to look at Litecoin's objective dynamic market structure. How do we do that? We just pop on the indicator from CTKS One of the things that you see, and I'll just draw as SZ around these Stanfield levels, you can see that Litecoin has quite a degree of overhead smart money sell resistance between 92.36 and 93.53, but once it gets above there, wow. Always make sure you do your three-dimensional risk management. Know what you will do if you are getting into Litecoin and the price moves against you. What will you do with that entire trade and your entire portfolio if price moves against you? I'm just assuming you're going long at spot. That is a good way to do things, at least until you're very, very proficient and you can handle risk. What if Litecoin just goes horizontal like this? What would you do? And if it blasts through this particular resistance, what would you do? And you can apply that kind of thinking to everything that you're investing and trading into. We know how important Bitcoin is, so I'll just pop on the indicator straight away. We can see that there's smart money support between that 29,238 and 29,269 level. Bitcoin is currently 29,383. We know the total is trying to get above that upward resistance. Where is the upward resistance with Bitcoin? It's from 29,543 to 29,574. We've been talking about Pied Pipers and canaries in the coal mine. I'd like to give you a bit of a thing to think about. Active learning is so important. What would you prefer? You can see down here A, B, C, and D. Would you prefer 1% 3 times a day, which is A, B, 2% once every 3 days, C, 5% once every 5 days, or D, 10% once every fortnight? Please let me know what you think, A, B, C, or D. And the key is to just explain the logic behind your choice. And as a bit of a bonus, I've just popped in Solana's smart money structural resistance levels. This is a really great learning exercise for you. Active learning is the key to your success. With the example I showed you today with the Pied Piper and the Canary in the coal mine, that's to just give a different perspective on all markets and therefore all charts being intercorrelated and interdependent. That means one depends on another. When you understand how the charts are moving, you get into synchronization, and that's where the market rewards you. You're never battling against other people, you're battling against your own synchronization. When you're in sync, you make profits. When you're out of sync, you write the rules. What do I mean by that? These are my personal rules for more than 30 years inside financial markets. You will find that you get your own rules as well. For example, if you go into something that's really hot and you end up buying at the top and just witnessing it plummet on you, that is a rule. You're out of synchronization. You want to try and detect that before it takes off or early in its takeoff process. Your rules are always about synchronization, how you can get the right mental attitude. One of the fastest and easiest way to become profitable in any financial market is to have the mindset of positive excellence. With positive excellence, you just simply won't give up. It's just not in your vocabulary. You'll just say, persistence and commitment, that's what I'm all about. I either win or learn and never blame. Why don't I blame? Because that's a valuable rule that I've just learned. I need to codify it. Therefore, you can have inner peace and outer peace. You're not FOMOing in to anything, fear of missing out, and you're not undergoing fear, uncertainty, and doubt, FUD. You know what you're doing. It takes a while to get into synchronization with the markets, but doing your daily three-dimensional risk management is a fantastic way to raise your synchronization. Just think about, what is the market doing right now? What will the market, in your interpretation, and of course, why do you think it will go that way? What will occur in the next 24 hours? Then you think about how it will impact your portfolio and your trades specifically, and then just give an indication to yourself how synchronized or not synchronized you are with the market. We know that we control the trade or investment, but the market controls the return. The market is either giving us a profit or giving us a lesson. That's it. It's important that you don't take the lessons personally. Don't get upset about it. The market is just saying to you, please learn this particular lesson that I'm giving you. And you can say, market, I hate you. You took my money. You can say, I am right and the market is wrong. Unfortunately, the market is always correct. So many people battle their mindsets. Mindset is a major issue inside financial markets. Most traders and investors, and I say most traders and investors, are unprofitable simply because they have a different mindset. They have the roller coaster mindset. Actually, they need the calm and balanced mindset. Professionals are very different from retail. Professionals buy on red. They buy when the price is going down. A lot of people say, Ken, what do you do when the trade goes against you? I buy when the trade is going against me. That's how I buy. But I won't get into a trade unless I feel I can get out of it for a profit. Unfortunately, what most retail investors and traders do, they buy on green. And because it's so enjoyable, wow, the market is going up, I've got so much confidence, and this is what they think. Unfortunately, they may just be caught in an up wave, not a real up momentum wave. Wow, don't we have fun? Pied Pipers, Canaries, and also waves. Learning the rules of financial markets is incredibly important. Having your foundations, knowing how to look beyond the charts, knowing how to find the market's focus, and before you buy and sell, mastering emotional control. If you would like to do deep dives into knowledge, let me know. Barry and Perperatum have very kindly offered 2 CTKS partial masterclass scholarships. You can apply in the link of the description of this video. If you seek to go from low levels of knowledge to confidently participating, the masterclass will definitely help you out. Like it's recently helped Claudia. And as Jay said, who recently finished the masterclass, it doesn't matter if it's a bull market or a bear market, you can make profit in any market if you know what you're doing. Thank you again to Let Me Know Barry and also to Perperatum for offering 2 CTKS partial masterclass scholarships. If you pop across to cryptotechnicalanalysis.org, you can read all about the masterclass, and if you click the testimonials page, you'll see that the Crypto Trading KS masterclass is very, very well regarded. Emotional management is a very important part of being profitable and therefore being synchronized in with financial markets. Rule 4, price moves in waves, is a fantastic rule to remember. Even in a downtrend, price is going up, and even in an uptrend, price is going down, because it's always moving in a wave. Rule 723 is so vitally important. Master fear. This is what it's all about. If you want to synchronize in with financial markets, you must master fear. The fastest way to master fear is lower your position sizes and just lower your profit expectations. You'll be surprised how much little percentages can add up to huge gains. As professionals, we're always using Rule 621, buy on red, sell on green, and that's Borsog, the price eagle, screeching away. You need to get on the right side of the percentage. That's actually what Borsog just said then. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.